Good morning.
Anytime.
Good morning, our esteemed lead investors and audience this morning. We welcome you to another new trading week. And briefly, so we look at the market, equity market review, what happened. We are already in the second quarter. What happened in the first quarter? The results are already out. And then dividend expectation, as we rightly projected in the first quarter, and the result, majority of them are already in the market, and the market has started responding to them. Then our stock recommendation, corporate actions, and then our weekly expectation for this week. So the last trading week, due to the public holiday that we had, we just had three trading days last week, and the market closed on a negative note as a result of sellout that occurred last week. And our projection last week was we felt that the market there will be a mixed trading as a result of the global happenings. And Donald Trump declared April 2nd as the Liberation Day, and we have seen that impact this morning globally. Asia market went as low as 16 years back, and even in Japan, the market has already closed, and there was a very huge loss both in the Euro bond space and everything. So what should we be doing this morning? What should be our expectation? I rightly said that even from our portfolio, I've analyzed it over and over again, that let us look at what is really happening. The inflow we have this year, what are the institutional investors, what are they doing, and what are the foreign portfolios? And I rightly said in our last presentation that based on what I'm seeing now, that the level of inflow we're having is not. And if you can see what happened last year, what we were reported did was that it's a circle. There will always be a circle. Has opened by 8, and we saw what is happening. The futures has already lost 16% very early this morning. And we saw also in the Eurobond, Nigeria, Angola, we have seen that impact, Egypt, everything. So what we are advising our clients that let us not be trapped with the dividend payment. What happened last year, that after dividend payment, what we recorded last year, that we had nothing less than 7 weeks consistent of bearishness in the market. That's what happened in last year. And the headwind that we had last year was basically the recapitalization. But what we have been now, the economic situation, we saw what the debt, Nigeria external debt has surged. We saw the devaluation, the money has lost this morning. So there's a lot of headwinds now. And what we are advising our clients that, irrespective of where we are now, let us just take at least a minimum of 20% cash of our portfolio. So don't wait for that corporate action that I'm expecting each dividend, I'm expecting this. There will be a serious pullback. But the person that is going to benefit more from this are people that have cash. And we are advising our client, just take a little. Let's diversify our portfolio. And that is why in Lead Capital, we are on top of the game, and we're advising our client. I've said that now with that. Take profit, put in increased income, the market will be bearish, you come back, increase your portfolio. That's our strategy, and we have already been announcing that. Previous week, I've said it, and some of our clients have taken that decision. And we are advising now that we are not advising that you should take out all your portfolio, but irrespective of what you have now, 20%, 10% is okay. Just sell out, have your cash attack. There will be a bit of pull back in the market. Then you can come back and reposition. And we have arrays of all products. We saw what God is doing. Our advice last week that let us invest in gold, because futures and next commodity have gold. We have gold on exchange, and we saw the prices over the week, the surge in gold. And we are also advising our clients, let's take position and let's take some actions that is going to edge against any unforeseen circumstances that might arise this week. So we saw what happened last week. As usual, the financial sectors did 77% of the whole market, followed by the consumer goods, and others just did 4%. And that also tells us that our market is basically driven by financial services. And we have saw that impact even on our GDP, that what we recorded last year was majorly driven by the financial sectors. The oil and gas sectors did not perform that great as we expected last year. But we have also seen that trend also And this year is going to be more challenging because of the current global happenings. And we have seen the price of crude going at below 60, and that is a very huge challenge for the economic team that we have to look how we have to diversify our revenue, that we cannot just depend on only crude for gain, and then we need to protect our economy. So we need to look at other sector, other financial sector, the agricultural sector, how they can help the GDP going forward. So last week, the market did just 3 days, and there was a bit of loss. The market last week closed at 105,604 basic points, and the year to date that we did in first quarter was 2.6. But during the last 3 trading days, the market loss is 0.14, and the market capitalization also depreciated to 66.147. So we have anticipated that what is sustaining the market briefly is just the corporate action, and we have seen great results being released by the banks, by different Total also released their results, and they are fine. But the economic situation, the world situation is quite different now, and we anticipate that the Nigerian market will be able to weather the storms and come out bigger in respect of what is happening in the global scene. But we expect a bit of pullback, and that will give opportunity for people that are not in the market to see that opportunity to come in. So out of all our sectors, all the sectors close negative, apart from the banking sectors, again is 0.22 last week. All other sectors, all that are covering the consumers, the insurance, the industrial, all close on a negative note. And we are advising for people that are in oil and gas, that our portfolio have a kind of exposure to oil and gas. I'm advising us that we should reduce, take profit, don't wait for necessary dividend. Let us just take profit out for the oil and gas. Let us reduce, and then we look at sectors that are not that exposed to any form of shock that might arise from the global market. So as we rightly said, we already have our projection table for the dividend, and we anticipated that the dividend payment for Access Bank, we anticipate that 1 naira 80 kobo will be paid. GTCO, what we anticipated earlier was 4 naira, and we saw them coming out with 7 naira, and that is fine. And we can see that if you compare that, their dividend yield is 10.13, and that is fine, and the analysis is 51. So this is very good for people that are already taking position in all these stuff. But we are advising that you can earn your dividend, that's fine. You can also take profit, that's fine. And you must have cash. That is the action now. Don't sell off. There's no need for you to be panicked to sell off. No. Let's just take action. You receive the dividend, that's fine. Then you reduce your exposure at least minimum of 10 or 20% of your portfolio to have cash at hand, because there will be pullback, and that will give us opportunity for us to buy back. So our recommendation for this week is that Access Bank is also part of our recommendation. ETI, First Bank Holding, FCMB, GTCO, they are part of our recommendation this week. And on hold, we have Airtel Africa, MTN, Unilever, and for sale is AfriPrudential, Eternal Oil, and Gerebu. So for dividend payment that we're having this week, qualification date, GTB will be closing this week, 15th of April, UB also 11th of April, Zenith Bank 15th of April, Stanbic IBTC 11th, Fidelity 15, FCMB 16, Custodian 14. So let us take action for people that want to take position. This also are a good avenue for people that already want to take advantage of the market. They can create in and then take some profit. Right. So our expectation this week, we expect this week to have a lot of mixed trading this week as a result of the global happenings. And we believe that at the end of the week, there's going to be a little pullback, and that will give opportunity for people to increase their holding. So what we anticipate this week, that there will be a mixed trading. The Nigerian market is not immune from the global market, so there will be a cascade effect from the global markets also on our local bourse. So we expect to be a mixed trading. The market will trade bearish at the first day of the week, and then at the midweek there can be a little pull back from that. So we expect mixed trading this week, and that is our expectation for this week. And I'm going to hand you to a senior colleague, Samuel, as we take on to the fixed income market. Thank you.
Good morning, everyone, and thanks for taking out the time to join us at this session. Quickly, we'll look at the fixed income side of the market to see what transpired. Uh, Last week was quite an interesting week. Interesting one in the sense that we had just 3 trading days, and the other side of the interesting part is the fact that the market was relatively quiet. We didn't see much activities in the market for last week, but notwithstanding, we saw that the funding rates, that's the open repo rate and the overnight rates, they relatively close flat. And that was on the back of system liquidity still being still very, very buoyant. Like I said, we didn't see much activity despite the liquidity levels in the system. So I guess a number of people were just they just stayed on the sideline watching all that we are currently experiencing in the global markets. So as such, you saw the funding rates close flat at 26.50 and 26.86 respectively. Another surprising thing that we saw last week was despite the liquidity levels in the system, we would have expected that some buy sentiments would saturate the markets. But we saw the opposite of that, whereas we saw some sell-offs, particularly on the short tenor securities. And as such, that led to the market closing on the bearish. That's the Treasury bills market now closing on a bearish note as the market share average yield rather shared 42 basis points to close at 19.86%. The market still awaits the Q2 calendar for Treasury bills auction. But looking at the last auction held 2 weeks ago, I know we didn't meet last week to discuss this, but looking at the result from the last auction, where 700 billion worth of NTB was offered, we saw a total subscription of 1.4 billion naira worth, and the eventual allotment was 808 billion. On the 91-day, we saw a 100 basis points increase in the stop rates, which went from 17% to 18%. On the 182-day, we saw the stop rate closing flat at 18.5, while on the 364-day view, we saw a decline of 31 basis points from 19.94% to 19.63%. And that wasn't a bit surprising looking at the subscription levels on that end. But one major factor I think we should be looking at is what is the direction going forward from here. Just as every other indicator in the market points to right now, I think that fixing your securities might just be the best way to go at this point. Looking at anything volatile might not be a good way to go, which is where some of the products we have in-house come to be. Particularly, just like my colleague had rightly said earlier, everyone needs to be very cautious right now. And the only form of investment that can give you a form of certainty and guarantee would be the fixed income space. You can put in your funds in fixed deposit for now while you watch how things progresses. And one thing we pride on as a house is that our rates are quite very competitive. If you look at what we offer and you compare it to what you would get from your regular and conventional banks, you would realize that you're better off placing your funds with us. So this is just a call to as many people who are still in the sense of dilemma, you're not so sure what to do. Rather than keeping those cash, you can place them for 90, 180, or even possibly 364 day in our fixed deposit products. By the end, we'll still touch more on the various products offering. And for the bonds market, as I said earlier, the market was relatively quiet. We didn't see much activities, but albeit we saw some sell-offs, particularly on the short tenor bond, and that was on the 2026. We saw that yields declined about almost 21 basis points on that. But looking at the entire yield curve, on the short end, we saw a 2 basis point average decline in yields, and while the mid to the long end of the curve, market was almost flat. We didn't see any activities, save for the 2031, which fell on the mid tenor securities. Maturities where we saw some trades pass through last week were the 2026, the 2030, and the 2031. The other maturities were almost non-existent in the market for the past 3 days, 3 trading sessions. And at the end of the week, we saw that yields advanced marginally by 1 basis point to close at 18.76%. So interestingly, looking at our foreign exchange market, as we can see from the table, we saw cross board both at the spot rate and the forward markets, the naira depreciated, and that is not in isolation from what we've seen in the general markets. And on Friday last week, we saw the naira, the official window, cross the 1,600 levels, which we've not seen in the past 2 to 3 months. And I think this is like the worst is done in the past 4 months. It crossed 1,600 naira per dollar. And that informed the CBN coming into the market to intervene as close to about $200 million was sold on Friday just to alleviate or to control the situation we currently have on ground. Are we going to see a further depreciation? I think all indicators right now suggest that we might likely see a further depreciation, if not another devaluation in the naira. But let's stay optimistic for now, because if you look at all parameters in the market, from the crude oil prices, which is a major source of FX in the market, I think a barrel of Brent crude is now trading roughly around 61, $62 per barrel. And when compared to the $75 that was projected in our 2025 budget, that's a massive far cry from that. But I guess we'll just keep our eyes open. That's why we're here. We'll continue to bring updates to all of our esteemed customers on the happenings in the market, and also to provide professional advice as the case may be. But looking at the forward contract as well, we saw naira depreciated right from the 1 month and up to the 1 year contract, with the 3 month contract losing the most at 3.75%. But like I said, we'll keep our eyes open, continue to bring further updates as things progresses. Next, please. So what then do we expect to see from the market for this week? Looking at the liquidity level in the market, we expect that the funding rates will still remain at their current levels, and that's if there are no sufficient significant outflow. And last week there was CRR debits. Hopefully this week we might not see that, considering that liquidity is now below a trillion naira. But then whatever happens will determine the levels of the funding rates. For the treasury bills market, we expect that the market will remain quite cautious as we await the calendar for Q2 primary market options, as that would further give insight onto what to expect in that market. And for the bonds market, last week market was relatively quiet. We expect that momentum to continue until there's some form of clarity as to what would happen next. But for now, we expect that it will continue to trade in line with liquidity level. But looking at the various product offerings that we have, like I touched on earlier, at this point, when it seems like everything is a bit rowdy and we're not so sure what to do, the best form of decision to take is just to fix your money into an investment that will give you a guaranteed return. And there are fixed deposit products offers you that luxury, such that you can get to place your funds from a minimum of 90 days to a maximum of 365 days. And the rate offered by the product is very, very competitive. I'm sure those who currently have positions in that product can confirm to that. But this is a call on those who are looking to, just as my colleague had advised, get in a profit position in equity rather than watch your investment nosedive. Sell off, put your funds in fixed deposit products, and then you watch the market for the best time to come back. And that is not to exclude the various other products we have, from our lead fixed income fund to the lead balance fund, the lead dollar fund. Also, for now on Eurobond trading, like we all might be aware of what's happening in the market, keep our eyes open and continue to advise on what next or what the course of action. And this is not to discourage people from buying. I feel like the levels where prices are gives a very good buying opportunity for as many people who are looking to come in. But we'll continue to bring our advice to you as developments present, or as development unfolds. With this, we come to the end of the presentation. If there are questions, particularly around how you might key into these products, now is the time to ask them. And if unfortunately we're unable to take some of your questions at the end of the conversation, you can still come back to us by reaching our customer service line. Okay, we have a question from Mr. Toby Olatunji. How can I invest in gold?
Thank you, Mr. Toby Olatunji. Okay. So we have platform Lagos Commodity Exchange also trade on gold, and also we have ETF that also particular gold. So that would be, let us take it out of the program. I will call you, sir. Then we can discuss more on how to go about that, sir.
Okay, please can the presentation be sent to us after the program? Yes, we do send out the presentation slides after each session. So today's one will come out, will go out before the end of today. You can check your registered email for that. And just in case you do not receive it at the end of today, please contact our customer care email, our customer care center via email or via the contact numbers. They would advise you on how to proceed. Mr. Adebayo, we can see your hand is raised. You've been unmuted to ask a question. You have the floor, sir. Mr. Adebayo, sir.
You can
Yeah, kindly unmute yourself, sir, and ask a question. Mr. Adebayo, are you there, please? Okay. While we wait for him, I think we have other hands up. Mr. Alex, you can unmute and ask your question, sir.
Good morning.
Morning, sir.
Thank you for the presentation. I would like to get the slide. Can we get the slide?
Yes, sir. It will be sent before noon today. But just in case you do not receive it, you can contact our customer service team. They would guide you on how to go about to getting the presentation slides going forward, sir.
Okay, thank you.
All right, you're welcome, sir. Thank you. Mr. Jani Wahab, you can unmute and ask a question, sir. Mr. Jani Wahab, kindly unmute your mic and proceed to ask a question, sir. Okay, while we wait for...
I'm talking about customer care number. The one I have is old one. I cannot reach the latest, so can you send the latest customer care number to me, please, or to so that we can contact them.
So, all right, sir, that's well noted, sir. Thank you for that. Okay, we have some questions. What is the fate of those who bought Fidelity Public Offer through you and are yet to be credited?
Okay, thank you, sir. We've submitted all the list of the investors that remitted through us, and we have submitted to the register, and they promised to get back to us before the end of the week. So we inform our client the outcome of their feedback from them. So there's no problem, sir.
Okay, before I take the next one, we have another question. Are you advising we sell off most of our equities position and invest in fixed income or in fixed deposit products? So like I said, the advice is not for you to sell off everything, but for as many that are in profit position, I think at this point it might just be the best thing to take some profits, if possible, sell off in some of your position and watch the markets on how things progresses from here. And while you've done that, you can also keep and proceed in a fixed income product such that your income is guaranteed, rather than keeping your equities positions and watch our markets deep right before our eyes. So I think that's the message we're trying to pass across for those in profit already. And from the projection that we have, the prospect the outlook rather doesn't seem quite clear for now, looking at the developments in the global space, which Nigeria isn't immune from. So it's just best that we edge against any future occurrences by diversifying. I think that's the message we're trying to pass across, sir.
For the GTB.
Okay, please, my allotted GTB shares from the last public offer is not reflected on my CSCS account.
Okay, sir. So I will look into that then. I will get back to you, sir, Mr. Said, before the...
Okay, thank you, Mr. Said Adebayo. A member of the team will get across to you on how to progress it. Okay, so why is Access Bank doing a commercial paper? I hope all is well. We might not be in the best position to provide an answer to why, but I would say, looking at the level where rates are, last year we saw rates went as high as 31%, but with rate at 24%, it might just be logical for any corporate to seize the opportunity to raise as much money as they can and the level that we currently have. looking at bearing in mind that some people were in the market at 30%. So I just think it might just be a logical thing to do to raise as much money at the current levels that market is. But as to the deep reasons why they might be coming to the market, we might not be able to provide answers to that for now. Mr. Gideon, we can see your hand is up. You may unmute your mic and ask your question, sir.
Mr. Gideon, you have the floor. You can unmute and
Hello.
You may proceed, sir. Mr. Gideon, if you can hear us, you've been given the permission to unmute your mic.
Hello.
Okay, good morning, sir. We can hear you now. I think in the absence of any further questions, we would like to draw the curtain to the session this morning. Thank you to everyone who took out the time to join us on this call. And we wish each and every one of you a productive day and week ahead. Thank you so much.
thank you for joining.